Carlsberg Brewery Malaysia hits an all-time high today on the news that the company would be added to the MSCI Global Standard Index at the end of this month. The counter made its largest single-day jump in recent years, surging to a record 37 ringgit 18 sen before paring gains to close still some 7% higher at 35 ringgit 66 sen. That expanded its market capitalization to 10.9 billion ringgit. Among the analysts tracked by Bloomberg, 4 have buy calls on the stock, while 7 have hold or sell calls. The consensus target price on Carlsberg is 27 ringgit 54 sen. In contrast, British American Tobacco Malaysia saw investors flee after MSCI said it would remove it from the said index. It will, however, be added to the MSCI Global Small Cap Index. The stock, which has already been under selling pressure, was the biggest loser on the bourse, slumping 5.6% to 11 ringgit 60 sen at the close for a market capitalization of 3.3 billion ringgit. According to Bloomberg data, of the analysts covering BAT, 8 have a buy call and 9 have hold and sell calls. The consensus target price is 16 ringgit 84 sen. Human Resources Minister M Kula Segaran believes Malaysians should capitalise on new-collar job opportunities to earn higher salaries and improve their long-term prospects. In an interview with Bernama, he said new-collar vocations have great potential in terms of income and future outlook. A new-collar worker is defined in a 2019 Forbes article as an individual who develops the technical and soft skills needed to work in technology jobs through non-traditional education paths. Instead of a traditional 4-year degree, such workers receive their training through institutions including community colleges, vocational schools, software boot camps, high school technical education, and on-the-job apprentices and internships. Malaysia is currently focusing on technical and vocational education and training programs to equip its human capital with the necessary technical and vocational skills. Currently, Malaysia's skilled workforce stands at 28%. According to Kula Segaran, the International Labour Organization has said that 15 years from now, up to 30% of courses currently offered by universities may not be needed in the jobs sector, while technical and vocational courses will remain relevant. Chin Hin Group property shareholders have been advised to reject the mandatory general offer launched by Chairman Datuk Sri Chia Beng Teck and his family. In a circular to investors, Inter-Pacific Securities or Interpac, the independent advisor for the MGO, said the offer was not fair and not reasonable. It points out that the 30-cent offer price represents a 24 cent to 25 cent or 44.44% to 45.45% discount to the counter's restated net asset value or RNAV of 54 cent to 55 cent per share. In addition, it says the 10-cent offer for the warrants represents a discount of 6 cent or 37.5% over the theoretical value of 16 cent apiece, computed based on the trinomial option pricing model. Additionally, the Chia family plans to maintain the firm's listing status, which means shareholders can still realize their investments in the open market after the offer's closing date. Interpac also notes that the Chia family does not intend to invoke Section 2221 of the Capital Market and Services Act 2007 to compulsorily acquire any remaining shares and warrants that it has not received valid acceptances for. Chin Hin Group property closed 1.6% lower today at 30 sen. Ecovest's 30.44% owned associate PLS Plantations says its durian business returns can easily overtake its oil palm plantation earnings as the company embarks on its upstream durian cultivation expansion. According to PLS Executive Director Lee Hoon Keng, the company sees the durian business becoming its main revenue driver in the next 6 to 7 years. PLS Plantations is an oil palm and timber group that has diversified into the durian business and currently derives the bulk of its earnings from its oil palm plantation business. The durian segment contributes some 26% of PLS's total earnings. In terms of capital expenditure, Lee says the company has spent some 80 million ringgit for its downstream durian business, while about 90 million ringgit will be earmarked for its upstream durian plantation operations. PLS has some 32,000 hectares of plantation land, of which about 600 hectares is planted with durians. It plans to buy some 80 hectares of existing durian plantation land within the next 2 years to expand its upstream durian business. Post Malaysia is selling a 49% stake in its indirect wholly owned unit, Post Aviation Engineering Services, to SIA Engineering for an indicative cash consideration of 10.09 million ringgit. Post Malaysia said in a Bursa Malaysia filing today, the share purchase agreement and shareholders agreement were inked by its wholly owned subsidiary Post Aviation. It said the deal will facilitate the entry of SIA Engineering as Post Aviation Engineering's strategic partner. It will also allow Post Aviation Engineering to expand its customer base by enhancing its technical expertise in the aviation sector, expanding its products offerings and diversifying into new lines of maintenance, repair and overhaul, and tapping into new markets and distribution networks. Upon completion of the deal, Post Aviation will be left with a 51% stake in Post Aviation Engineering.